Thank you, Mark, for that introduction. I don't promise to be calm today, depending on what the questions are at the end of the session. And thank you to Red Cloud. Thank you for giving Franco this opportunity, but more so, thank you for sponsoring the exploration side of our industry. We all know the vast amount of value in the industry is created with the drill bit. It's not always easy to raise capital for that end of the industry, and so we think and applaud Red Cloud for the support they give to exploration in the industry. Please heed the cautionary. I'm going the wrong direction here. Let's see if I can get this to go backwards. There we go. Mark mentioned a bit the track record of Franco Nevada. Much of that, as I say, has been because of the drill bit. We are trying to create a low-risk way for our investors to participate in the exploration success of the mining industry. That has worked tremendously well for us. You can see in terms of the returns of the stock outperforming not only the gold index and the gold industry, but all the relevant indexes, the NASDAQ, the TSX. Our pitch to our large generalist investors is we're not only a good gold investment, we think we're a good investment, period. Quick snapshot just of the growth of the company since our IPO. You can see we've been able to grow it steadily, whether that's GEOs, revenue, market cap, and the profitability of the company has come along with that. A great advantage of our model, obviously being top line, is we're not exposed to cost inflation. That is very attractive, particularly in an environment like now where you see a lot of inflation through the industry. This is a snapshot of our dividend. Our view on dividends is to make them sustainable and make them progressive. We've been so lucky that with the growth in the company, we've been able to increase the dividend every single year. That's the number one objective of our board when they think about the dividend. They would like to be able to increase it regardless of the environment. If the gold price is up or down, we'd love to be in a position that we can keep increasing that dividend. Turning to the business model. ESG is much more of a focus for investors these days, and I say that as investors. It's always been a focus for us. We're long-term investors in properties, always taking the view that unless you get the environmental side of things right, unless you get the community side of things right, you're not going to be successful in the long term. It's a big focus of our team in doing due diligence. We see ourselves as allocating capital on behalf of our shareholders, and we know they want us to do a good job making sure that we're supporting good projects, make sure that we're supporting good operators. Key part of our business is partnership. And the business has changed. You all know the original Franco Nevada was very much about buying third-party royalties on properties, and that worked very well. But it has morphed. That still is part of our business, but very much our business these days is as a financing partner, largely providing stream financing, often for big construction-ready projects, but also at the earlier stage of the industry, being a partner for the industry. And so the key thing in us doing our deals is not only that it's successful for our shareholders, but for it to be a repeatable business model, it also has to be successful for the companies that we're dealing with. I can tell you that our team, anytime we're doing a deal, mostly what we're looking at is the share price of the company that we've done the deal with to see are we having the impact we hope to and driving their share price up. Briefly on our portfolio. Company's been around for 35 or more years now in its various iterations, and we've been able to build up the broadest portfolio in the industry, many of that royalty assets, and also on the streaming side. And I'll speak first to the royalty side of the business. Royalties, they tend to be smaller interests, but what we found with royalties is tremendous optionality. Most of you are familiar with the story. The very first royalty that Seymour and Pierre had bought on Gold Strike at the time was not a world-class deposit. It was a small open pit. It was a junior company, Western States Mining. It had about 600,000 ounces in it when Pierre had bought that royalty. It was a couple of years later, Barrick bought that property, did the deep drilling on it, and made the discovery that is Gold Strike. And it's, I think, part of the legend of the industry, the fun that Seymour and Pierre had alongside Peter Monk and Bob Smith, promoting the success of Gold Strike, and it really was the asset that drove the success both of Barrick and of Franco Nevada. We've had a couple more that have been in that same mold. Probably top of the list is Detour, and very topical today. It has been producing about 650,000 ounces. It moved from Detour Lake into Kirkland Lake Gold now to Agnico. Agnico can't say enough good things about the asset. Continues to have success drilling at depth. They're now speaking at producing at more than 1 million ounces per year at Detour. I'll go back to when Franco did that deal, and it was David Harquail who did the deal. He did it with Ingrid Hibbard at Palangio. Detour was an underground mine. Placidome had it. Not a great success. Operated for a few years and then was shut. And a number of years later, they were looking to dispose of the property that really had very little value in their portfolio. They struck a deal with Palangio for them to acquire the asset for $2 million. Ingrid didn't have the money at the time, and so David put up the $2 million. The deal was a 50-50 JV between Franco and Palangio, with a proviso that if Palangio paid back the $2 million, that Franco would dilute down to a 2% NSR on the property, and Palangio would own 100% of it. They were able to do that, and then nothing happened for about a decade until Gerald Paneton came along with the thesis that rather than an underground mine, we could make this a massive open pit. He led the program to the discovery of what is the larger Detour today, and it is a great driver of success. But I tell the story to make the point. Getting exposure to world-class deposits doesn't always mean investing in world-class deposits day one. It's finding them early. It's appreciating that we can't see under the ground. And we are in the business of getting exposure to good mineral belts and the exploration success. The other side of our business has been streaming. It's been the bread and butter of our business. Gold and precious streams on big copper deposits. We have our 4 biggest assets are all in that mold on some of the world's biggest copper deposits. Cobre Panama with First Quantum, Antamina as a joint venture, Teck, BHP, Glencore, Antapaccay with Glencore, and Candelaria with Lundin Mining. I'd say, this is the model of, we always say to ourselves, great deposits only get better. And we are very happy to invest in these deposits at a very low rate of return, knowing that when you've got massive mineral endowments, your chance of finding more is extremely high. What it's done for us is increased the life of our portfolio. Those copper assets, they tend to be longer dated assets. It gives a lot of duration to our portfolio. It really, the way we like to think about it is having that foundation of long dated cash flows gives us the ability to take more risk with earlier stage properties. We can take the timing risk. We can buy those options knowing that we're in business for 50 or 70 years. We've got time for those options to mature. They're immensely valuable in our portfolio. Quick picture of the diversification of the portfolio, because it is so broad, whether it's by commodity, geography, assets, or operator. We are the most diversified of the mining companies. And on the commodity side a bit, we're a gold-focused company. We want investors to think of us as the go-to gold stock. But we've always also invested in other assets. And it's because the most fundamental thing in our investment strategy is exposing shareholders to that resource optionality, that ability either to invest in long-dated assets or to invest in assets that get better over time. And we found whether that's in oil and gas, copper, nickel, hopefully more on the battery metal side, that same phenomenon plays out. We know all the industries are highly cyclical, so there are times when you want to invest, there are times when you don't want to invest, and we found having a bit of a diversified investment strategy has really allowed us to generate better returns for investor over time, participate in the cycles of the industry. Broadly on our growth, there's good growth built into the portfolio. We usually give guidance out 5 years. The biggest driver in that growth is Cobre Panama. Cobre Panama being expanded, 85 million ton per annum, going up to 100 million ton per annum, along with a number of other assets that are contributing to that. Two themes in the growth are mines getting expanded and then new mines. Of those mines getting expanded, I've spoken about Detour, probably top of the list alongside Cobre. With that expansion, you've also got Tasiast that Kinross is expanding. Stillwater will expand over time. The Vale debentures that we have on Vale's premier iron ore assets in Brazil has 2 tranches. The second tranche of it will kick in a couple of years, and that'll also help drive our growth. The bottom half of that graph, as you can see, is new mines, and there are a growing list of new mines that we have royalties on. Top of the list in terms of coming online will be Salares Norte. Goldfields is well advanced building that. It's a high-grade asset in Chile. Seguela will follow up, a smaller asset with Fortuna. We just invested and announced it a couple of weeks ago in Magino that Argonaut is building, should also come online next year. Following on that, you've got Hard Rock, you've got Valentine Lake, you've got Eskay Creek, and you've got Tocantinzinho, a deal that we did earlier this year that G Mining is building down in Brazil. So good exposure to much of the activity building new mines in the gold industry. It's hard to put a picture on what is the value of all the exploration plays that we have in our property. Try and do it with this. The bigger block there you can see are our top 10 assets. These are just the ounces that are attributable to us, so effectively our royalty share of those ounces. You can see the bulk of it in those top 10 assets. The box on the top right there is showing those other assets that are in our 5-year guidance, and then the bottom below there are assets that are not in our guidance at all. They don't make up part of anybody's NAV. But you can see in that a good amount of exposure, particularly to copper assets. We have a royalty on Taca Taca, likely the next big copper project that First Quantum builds in Argentina. We have one on Cascabel in Ecuador, one on Nueva Union, which is Teck and Newmont down in Chile. Also a couple of nickel ones, Crawford Nickel, which is Canada Nickel, and obviously we have royalties that cover much of the Ring of Fire. A lot of that is chromite, potentially some base metals, but the first asset to be built there, the Eagle Mine, nickel exposure in the portfolio. I'm going to speak now about a couple of the deals that we've done that have been earlier stage deals, just to give a sense of what we do at the earlier end of the spectrum. And the starting point is, yes, our go-to is either buying interest in operating mines or financing mines that are construction ready. That's where most of our dollars go. But if we're not doing that, we do say, if we put money in earlier stage, where do we go to? And the most obvious place is companies that have a pre-feasibility, where they've got demonstrated economics on the property. They need money to get that to a feasibility. There we can get our hands around the fact that this will be a mine, and it's been a good place for us to invest. A good example of that is a deal we did a couple of years ago. This is with Marathon Gold on their Valentine Lake deposit. It's one of the highest grade open pit targets in Canada. They had completed their feasibility exactly as I said. We'd put in the money. Not only did we could see that this was a highly economic deposit, but also on a very prospective trend, had a very bullish view on what they could do with exploration. So very fortunately, that has panned out. They have got their permits, they've advanced it to production, they've now made a production decision, and but at the same time have had great exploration success on trend, really have discovered and proven up the Berry deposit, and that story has gotten better and better. Another one on a similar theme is Cascabel in Ecuador. They had also proved up an initial resource. Very clearly, this was one of the top block cave development targets in the world. Both BHP and Newcrest invested in the company, and I think there's a good probability that ultimately one of them would acquire it. It'll take somebody like that to build this scale of deposit. They needed money to advance their studies to take it forward. We had provided that. Again, they've had great exploration success, actually not directly on Cascabel itself, but immediately adjacent with their Tandayama America target. They have discovered an open pit target adjacent to the block cave target. It is potentially a game changer because it means we all know how long it takes to do the development of a block cave. It gives them the prospect that they could start with this open pit while they're doing the underground development and move the construction of the project ahead even quicker. Another deal that we have done recently, it's a bit of a combination of an old deal and a new deal. Franco, for many years, had a royalty on SK Creek. As you know, Barrick had mined that. At the time, it was the highest grade deposit, certainly in Canada, maybe in the world, when they were mining it. Royalty paid out very well, and it was a great success. Mine was closed. As we got into low gold prices in the 2000s, it's now owned by Skeena Resources. They've had tremendous success exploring this deposit. Again, proved up what a very attractive economics. Again, this will be, they've got close to 4 million ounces and close to 4 grams per ton gold equivalent in that deposit. So enormously economic open pit development project. We had done a deal with them recently. We actually acquired some of the equity. We expanded the existing royalty that we have to cover what is now their full property position. Also got a right of first refusal on a royalty that Barrick still held on the property that they have now bought back. That exploration story continues to get better if you're not following it. Most recently, they've put out drill results showing that they've extended the deposit another 650 meters on strike. It's going to be a fantastic new mine in Canada. Still haven't figured quite out where to point this. See if he's listening. There we go. I'll finish off. We, as always, have a lot of capital available for investments. That's roughly $1 billion in cash, $1 billion in available credit facilities, and we're generating roughly $1 billion per year. Our business development team is extremely active. We're always looking to grow the company, and look forward to having discussions with many of you around the table. So I'll finish off on my last slide, and we often speak to this in terms of what makes Franco Nevada different. And I'm going to focus just on one element of it here, which is shareholder alignment. It's always been part of our DNA to own a lot of our own stock so that we are aligned with our shareholders. Our objective is not to make Franco Nevada bigger for the sake of being bigger. Our objective anytime we do a deal is to make sure that we're adding value to the company when we do that deal so that we can drive our NAV per share higher and we can drive our share price higher as a result of that. And I turn that around in terms of where we actually find we do our investments. Sometimes we're dealing with companies where management are not substantive shareholders, and it's seldom that we actually get deals done with those companies. Those management teams are most inclined to issue equity. They're not concerned about shareholder dilution. We find where we have great success in dealing with companies is where management are shareholders. The folks that we're dealing with are shareholders, that they care about share dilution, that they care about driving their share price highs. Those tend to be the parties that find royalty and stream financing attractive. So if you have a great deposit, if you're looking for financing, if you'd like to drive your share price higher, we'd love to have a discussion with you. Thank you, Mark.